So we can start, today's call. And Pallavi, if you can share the screen, I can start. So we have sent out, the emails to almost 250 plus investors in the last few days for signing up the angel fund with the angel fund, and the process is on. So eventually, everybody who wants to sign up with the angel fund for investing through us. So our target is that by March we should be, done with this process for almost all the investors who are presently in the network and want to invest through the angel fund. And that is why we have, waived off the onboarding fee, a one-time onboarding fee of 25,000. Uh, we will uh, charge it after April, but till March, this onboarding fee of 25K is waived off. So I'll quickly go through this presentation so that we're clear on the basic concept of the angel fund, and then we can start with the questions. So what is an angel fund? So angel fund is, it's a special purpose vehicle, you can say, which has been designed by, uh, SEBI. It is primarily to, allow investors to put in money into startups, and decide which startups they want to invest in, but doing it entirely through an AIF, that is, an alternative investment fund. So they want to regulate this, the angel investing by bringing it under the angel fund umbrella. So earlier, I mean, when the angel fund concept was not there, most of the angel platforms were operating as networks. Agility also started as a network wherein um, we were investing in companies either directly on the cap table, or we were forming SPVs, which were deal wise. We were making LLPs and kind of pooling in the money there and then investing. So that was really cumbersome, because for each deal, if we have to create, a LLP, and then, uh, the main object uh, of the LLP is uh, you know something else, say advisory or mentoring of startups. But however, it is being used for the purpose of investment. Though there is no restriction as such in under the law that a LLP cannot invest, but also, the MCA doesn't allow forming of LLPs for the purpose of investments. So, if we really want to, work in a more regulated and proper manner, then we had to have the angel fund registered. So, like other networks, most of the networks which are there in the country now, they have, transitioned to the angel fund, and so has agility. So the benefits of an angel fund are that, one, definitely it is a SEBI regulated environment. So all the investments that are done are regulated by SEBI. We are subject to audit by SEBI. There is a trustee, which is an independent trustee company, which is approved trustee, from SEBI, which sits and watches whatever we are doing, and they have to certainly report, whatever this fund is doing, they have to report to SEBI at their own, on their own, and also, multiple reports go. So that is where all the investments that are there that are happening, for each investment there is documentation that is filed with SEBI, and all the details are, submitted. So one is definitely that it is a regulated environment, which definitely gives a lot of confidence to the investors, and also even to us when we are operating in a regulated way. We also, are, you can say, avoided from making any mistakes. So we are guided by, the law, that we also don't make any mistakes. Then the higher quality startups, definitely. when it comes to the investee companies, if they are getting a fund on the cap table, then definitely they would prefer over a network coming on the cap table in form of individual investors coming on the cap table, or even a LLP also. So that is where we are already experiencing that the quality of startups that we are getting now is better than before, and as we go forward, the quality would improve only. Because we are a fund, there is definitely a scope for negotiations with the investee company because of the advantages that they also get getting us on board as a fund investing into them. Then, it is a one-time process to sign up with the fund. So your KYC, your, bank details, everything is there when you are registered with the fund. So every time you have to invest in a deal, you just have to show your interest, and there will be a drawdown letter issued to you, and you invest into the funds account. So once the funds account is mapped to your bank, it is only a bank transfer that you can do, and that is it. And so once your investment is done through the fund, the details will start showing in your statement of account as I'll explain as we go forward. So the entire process for the investors becomes very easy. Next slide, Pallavi. So as we have transitioned from the network to the fund, there's just a small comparison. So we present, one startup a week for those who are attending for the first time. So we present one startup a week every Saturday at 11:30 a.m. That would still remain the same. So earlier you were investing, um, the decision to invest was, the investors' prerogatives. It is still remains the same. So you will decide deal by deal. The opportunity form will be shared, after the pitch session on the Zoom call. The same will continue right now also, and after the Zoom call, it is shared on the groups, the WhatsApp groups. So the call for money that we were doing was along with the due diligence process earlier, but now we are calling for money when the startup is presenting on Saturday. The basic due diligence is already done by our agencies, which are independent of Agility. So they are a law firm and a CA firm which do the basic due diligence. And based on their basic due diligence report, we call for money along with, whenever the startup pitches. So in that call only, as I explained, we will call for money. We will collect your opportunity, but we will also call for money. Immediately after that, maybe in a couple of days, we will issue the drawdown letters. So in terms of ease of payments, earlier, the IB fee uh, and the investment, these two payments were to be made separately because the investment was made into either the investing company directly or in the SPV created specifically for that particular investment. And then the IB fee was given to Agility as a, against a separate invoice that we were issuing to you. Now it will be one transaction, both investment and the investment manager's fees. No, it's not the IB fee, it's investment manager fee that will be, um, you know, Mayank, you can ask these questions as we move forward. So we'll answer all the queries. So one transaction, for both investment and investment manager fee to the fund. So you have to transfer the amount only to the fund, and the investment manager gets the fee and the GST from the funds account. So the due diligence process, as explained earlier, it was you know the there was no basic due diligence being done. It was done post the interest from the investors. Now we are presenting the startup with a basic due diligence. But once we are going ahead with the transaction because of the interest that we have got from the investors, then the comprehensive legal and financial due diligence is done. And then the reports are shared with the investors. Can we go to the next slide? So the charges were, the standard IB fee of 2%, but now it is 2% and there is a carry fee also. Just give me a minute.
Right. So, coming to the point, for charges, there has been a slight change. Earlier, we were charging a standard IB fee of 2% plus GST, but now, with the incoming angel fund, we will also be charging a carry fee of 10% at the time of exits.
Yeah, so which I will explain as we go forward. So thank you, Pallavi. So as regards the shareholding, earlier the shareholding, I mean, your investment, either you get shares directly of the investee company or the LLP in which you become a partner gets the shareholding in the investee company. Now it would be the angel fund which becomes the shareholder or comes on the cap table of the investee company. Now, as regards documentation, what you get uh, earlier as an angel network, you were getting either the share certificate or the LLP agreement and the share certificate in name of the LLP. But now, uh, you will get a statement of units in the various schemes, or you can say the startups that you invest. So, like a mutual fund scheme, if you get a mutual fund statement, you get what all units you hold under each scheme and what is their current NAV. A similar statement you will get once you start investing through the angel fund. In terms of eligibility, though there was no eligibility that is that once we were investing through the angel network, but now there is a SEBI mandated criterion which we need to fulfill to be able to invest through the angel fund. I mean, for the investors. So, as we mentioned, we will be charging a carry fee that is on the exit. This is, it is, you can say the percentage of the fund's profits that fund managers get to keep, or as uh, our share of profit on top of the one time fee that we are charging on each uh, investment. So why the carry fee had to be introduced? Because of I mean, once we are working in a structured manner in a regulated environment, there are a lot of compliances that we need to do. There is a lot of additional costs that we need to incur. So managing it in a 2% one-time fee is not feasible for us. That is why we introduced this carry fee, which is a very which is it's a norm in the industry, and most of the angel funds that are there currently operating uh, in India, they are charging a carry fee. And though in a VC fund, VC structure, the carry is minimum 20%. But in case of angel funds, we have seen that people are charging between 10 to 15%. So we have kept it to 10%. So if you look at the example, if the amount realized on exit is 30 lakhs and amount invested is 10 lakhs, the profit is 20 lakhs. So out of the profit, a carry of 10% is kept by the fund manager, and then the net amount, that is 30 lakhs minus the carry fee, 28 lakhs is remitted uh, to the investor. So, but this carry fee is charged after a hurdle rate that is met. So, let's go to the next slide. So, what is a hurdle rate? It is, uh, you can say the return, the annualized compounded return, up to which the fund manager will not participate in the profits. So, this is like a return, uh, which is first given to the investor over and above its capital, and then the remaining profit is the only profit in which the investment manager participates in form of carry fee. So suppose, I mean, I've just explained it through an example. So amount realized on exit is 11 lakhs, whereas the investment was 10 lakhs. Suppose the exit is within 1 year. We've just taken it 1 year for convenience sake to understand. The profit is 1 lakh. A hurdle rate of 10% return, is also 1 lakh rupees. So there is no net profit available after the hurdle rate. So there is no carry fee for the investment manager, and the amount remitted to the investor is full 11 lakhs. Whereas in example 2, the amount realized on exit is 15 lakhs, amount invested was 10 lakhs, the profit is 5, with the hurdle rate of 10%, again assuming it is a 1 year holding, the net profit available is 4 lakhs and the carry is 10% on the 4 lakhs, that is 40,000. So what the amount the investor gets is 10 lakhs, the initial capital contribution, and 4 lakh 60,000, uh, after deducting the carry. So that is what the investor gets. So agility fund charges include, you know, the first is the onboarding fee, which we are waiving off till April, I mean, till 31st March. April 2022 onwards, we will start charging this onboarding fee. Uh, then it is the investment manager fee, not the IB fee. I'm sorry for this typing error. So it's the investment manager fee. So it's 2% plus GST. So it is a one-time fee that will be paid by you along with the amount that you have invested. But as a consolidated amount, it will go to the funds account. And the carry fee, that is the additional return which I just explained, over and above the hurdle rate of 10%, that will be charged. Now the GST on this, there is some dispute going on. So I mean, once that is decided by the courts, if the GST is applicable on the carry fee, that will be charged over and above this 10%. Otherwise, if it is considered as a share of profit, then it might not attract GST. This is something which is under litigation. So coming to the process, I mean, I briefly explained it earlier, but once you attend the pitch session on a particular Saturday, you fill in the opportunity form during the call or later. You receive the basic due diligence report in terms of investment. If you want, you can receive it before filling the opportunity form, or else once you fill in the opportunity form, then that is shared with you. Because once you have you know uh, filled in the opportunity form, you have always the right to decline also, that you would not want to go ahead with the investment, looking at maybe the basic due diligence report if you want to. Then uh, if you are not an investor who's registered with the fund, there will be a process of signing the contribution agreement. That is a one time process, as explained earlier. And then you can invest once you have signed the contribution agreement. Then you are made to join the WhatsApp group for that respective deal, because all communications around that deal will be done on that WhatsApp group and not on the main group of where you would be a member. So moving to the next slide. So as a process, we open a scheme for the particular startup and issue drawdown notices to investors. So if you have filled an opportunity form and you have not declined it, say within a couple of days, we would move ahead and open the scheme and issue a drawdown notice. I mean, to you, if you are signing the contribution agreement. Once you have signed the contribution agreement and your KYC is done with the fund, then you will receive this drawdown notice after that. Now, on receipt of the drawdown notice, you will transfer the investment amount and the fee to Agility Fund immediately. So you get a time of 15 days to do that as per law. So we request that people who are going ahead with the investment, they transfer the funds within the given time. And parallelly, we initiate the comprehensive due diligence report. Now, once the comprehensive due diligence report is available, if there are any red flags which lead to us deciding to drop the deal, we will drop the deal and refund the money to the investors. But under normal circumstances where the comprehensive due diligence report states that I mean, there are no red flags as such and everything is clean, we would share the reports with you. And in any case, I mean, the reports will come to you for you to decide whether you want to move ahead with the investment or not. And once we get a go ahead of from all the investors, we'll transfer the money after signing the SHA with the angel fund as a shareholder with the investee company. So we'll transfer the investment from the agility fund to the startup. So that is the entire process, from the pitch to transferring the money to the startup. And then once we have transferred the money, then we get a share certificate, which is if we can go to the next slide, Pallavi, yeah. So we receive the share certificate in name of the angel fund. Uh, in respect of that particular scheme, and then the investors receive the units of that particular fund scheme. So that is how it uh, ultimately the process of investment in a particular scheme is completed. So the minimum investment amount per deal will continue to be 2 lakh rupees. Now this is not defined by SEBI, it is defined by agility. The minimum amount per deal we have kept at 2 lakh rupees. Then all communication is shared by via email, and WhatsApp is just to keep you updated about the deal and all. Yeah, we can move ahead. So the criterion for an angel investor. So I know there is a lot of lot of questions are around this, but this is something which is again uh, you know it is mandatory as per the SEBI guidelines. It is not defined by agility. Um, Definitely, it is something that people are concerned about, because an individual investor needs to have a net worth of 2 crores, and which is excluding the principal place of residence. So you need to have net worth of 2 crores. Now you can give a self declaration that you have a net worth of 2 crores. For us, this document is very important because SEBI, when it does the audit, they will ask us that how did we ensure that while signing up, your net worth was above 2 crores. It is only through that self declaration or a CA certificate, wherein we can have that assurance that yes, your net worth is above 2 crores. So that is one. um, the other is the body corporate, whether it is a LLP or a private limited company. You need to have a net worth of at least 10 crores. Now this is definitely a little surprising for us also, because when we got to know when we started with the fund registration that this is the criteria for net worth, because the minimum amount that you're committing while you're signing up the contribution agreement, again the minimum amount has been defined by SEBI, that it has to be 25 lakhs over the next 5 years. So if it is 25 lakhs only that investors are committing to invest over the next 5 years, then the need for having a net worth for a body corporate to the tune of 10 crores and an individual to the tune of 2 crores is a little on the higher side. That is our opinion. But again, the guidelines very clearly state that. So can we move ahead? So the documents needed to be signed up for Angel Fund are the contribution agreement, the net worth certificate or a self declaration, a passport size photograph, a cancelled check, a copy of the cancelled check, and a self attested KYC, which is your PAN, Aadhaar, or whatever KYC documents you are providing. They need to be self attested. Now all this is required, and we need to keep this in our documents. And contribution agreement is required for onboarding, so we need to pass on this information to the fund administrator, who will do all the needful and onboard you as an investor, and then the information is also given to the trustee. And so the number of investors who have signed up with the fund, all that information is provided to the trustee company also on a regular basis. So I think this is the end. Okay, this is the last part, that is transferability of units held. So I mean, when it comes to startup investments, we always tell people that there are only three modes of exit for investors to get an exit. There are three ways. One is when there is a larger investor coming in and buying the shares held by the investor. The second is if there is a acquisition that happens of the company, of the invested company, uh, or third is an IPO. But when you invest through an angel fund, you can, without these three things happening, you can still sell your units to a buyer who wants to buy. So that gives you an advantage of investing through the angel fund, that you can sell your units to a buyer who's interested in buying. We as a so there is a clause in the contribution agreement in the PPM also, that when you want to sell, you have to seek approval of the fund manager. So we would obviously, we will approve the transaction if there is nothing that is you can say there is any reason that why we should not approve it. So but that does not mean that we will find a buyer for you. The buyer will be only when there is a collective exit. So collective exit means when we have invested through the fund and we get an opportunity to exit when there is a large investor coming in, then it will be that we will be doing it. But in case you want to sell your units to a friend who wants to buy it, the friend has to be registered with us as an angel investor, and we can approve this transaction to happen. Yeah. So I think I'm done with the presentation. We can start with the questions. Manji has raised his hand. Go ahead, man. Yeah, man, you raised your hand. Mandeep ji, you can go ahead if Mayank is taking.
Yeah, Prashanti, just one thing that I think it's all spot on. But let's say the minimum is 2 lakhs per deal that we are investing, and we are saying we'll charge at 2%, which basically means 4,000 rupees, right? The idea would be that if somebody wants to invest 10 lakhs in one, then you charge 2%, but also have a cap, right? Because you don't want to, because that I think is more a transaction management fee than anything else. So, for example, it can be capped at 5,000 rupees, right? Then people are motivated to put in higher sums where they see a kind of value.
Mandeep sir, I know I understand what you're saying, but for us, honestly, uh, the kind of effort and the kind of cost that we are incurring to, first, shortlist the startups for our investors. You are already, I mean, you're part of the panel. You know that, so there is a cost for, scouting for the startups. Then there is a lot of cost which goes into the legal documentation, the due diligence process, and in certain cases, valuations and the other expenses that go along with it, and now the SEBI costs. So I mean, capping it at 5,000 rupees won't be possible, and I don't know. There would be platforms which are doing it, but for us, it would not be. I don't think so. It will be really feasible for us to do that, but as you mentioned, we'll discuss this internally, and we'll see what best can be done. But as of
Yeah,
now,
I'm just throwing it out there for you to, uh, to decide upon. It's an
yeah, yeah,
idea. Yeah, yeah, yeah.
yeah, yeah, definitely, sir. Well noted, sir. Yeah,
Mayank,
Mayank.
please go ahead.
Yeah, hi. Sorry, I was not able to unmute. Okay, so my first question is: Beacon Trustship is an independent entity, or is somebody from Agility a part of it?
No, no, it's a SEBI approved trustee company. So they are providing trustee services to a lot of funds. Um,
Mhm.
and, so they are approved by SEBI to act as trustees. So we can't just pick up any trustee and make them as our trustee. It has to
Okay.
be SEBI approved, yeah.
My next question is again regarding the contribution agreement. So there is a withhold clause, specifically if I talk about 2.2.3. Now I
Yeah.
just want to understand that there's a clawback clause as well. So are they two the same thing in some sense?
Yes. So, the so the power to withhold any amount, or the clawback is only to the extent to allow us to recover any uh, taxes or any other things that become payable to us at a later date in respect of a scheme. So ideally a fund is a pass through entity. So we receive the amount on exit, whatever charges are to be deducted, rest amount is transferred to the to the investors, and they have to meet their own taxation liabilities. So
Right.
the only reason why this right has been given to the investment manager is basically to recover the those tax demands which might arise at a later date, because once the amount is received, it will be remitted to the investor. Now, uh, obviously, if there is anything that is coming as a demand later, which needs to be recovered by the fund, it will be from your other payouts, so we'll have to
Yeah.
recover that amount. So that is the only thing. And it is more, I would
So it
say,
is more or less
theoretical.
the same as clawback clause that you have, right?
Yes, yes,
All
definitely.
right. I just got confused because the same thing was mentioned twice. So I thought,
Yeah.
so another clause 2.5.3, which is limitations to liability of investors. I don't quite get the whole 2.5.3. So effectively, if there is any sort of indemnification or liability that comes onto you, so does the clause says again that you will pass it on to the investors and you will recover it from them at a later date based on the distributions of their commitment, right?
Exactly. So this is again what I said earlier, that if there is
Uh,
anything kind of a tax demand or something that comes to the fund, and that otherwise would have been recovered from the investors. So because the remittance has already been made without recovering these charges, so
I
that
get that
is
point. I get that point.
that is
Yeah.
that.
So regarding 2.6.1 co-invest, so if I understand correctly, so anybody that investment manager thinks can become a co-investor in the scheme, and he doesn't have to go through the same fee structure or the you know mm, the carry fee structure. I mean, is he exempted from that?
No, no. So it is, that is what it is mentioned, that the terms of the investment cannot be more beneficial than what has been for the investors through the fund. So suppose, I mean, it is to just to avoid, that suppose if there are, say, investors putting in money through the angel fund, and I tell one of my friends that, okay, you can also co-invest, and I'll get you a better deal.
Hmm.
I cannot do that. So
Okay.
I am being stopped from passing on benefit to other co-investors. I mean, so one is the angel fund investing, and then there can be other co-investors. So
Hmm.
other co-investors cannot have a better deal than what the fund investors are getting. That is what the intention is, so that there is no foul
Okay.
play, done by any fund manager. So that is kind of a restriction on us, that we cannot, allow, where we cannot, get into a deal where there are other co-investors getting better terms than us.
So the co-investor will get the same terms as the normal investors, but it is up to your discretion or the investment manager's discretion to onboard a co-investor for a particular scheme or maybe on the fund itself, if I'm getting it correctly.
No, no, no. So as I said, this will be outside the fund only. But suppose if
Acha.
I enter into an agreement with somebody that you can co-invest in this deal with us, you
ठीक है.
know, at terms which are more beneficial to that person. So that is just to safeguard the interest of the investors who are putting money through the fund.
Okay. And the money will not. So the last line reads that it will not contribute to the fund, whatever investment the co-investor is making. Okay.
Okay.
And lastly, the clause 12, which is regarding the distribution. Um, now, C2 and C3 are, uh, I mean, maybe a distribution waterfall would explain how the distribution happens. So those clauses will become self-explanatory.
Okay, so we'll circulate that. I mean, we
Hmm.
don't have it handy right now. We'll circulate that.
Right.
I think there are some examples. Neha, if you're on the call, if you can,
Yes, sure.
please do that.
Uh, the examples in the PPM.
Yeah.
Just allow me a moment.
Till that time, I mean, if anybody has another question, we can address that till the time Neha pulls up it on the screen. Yeah, okay, it's there. Yeah. So
Prashantji, as there is other platforms offer, what Dhyanuji was explaining earlier, there is a carry which is charged by the fund by the fund at the time of exit,
yes, sir.
which is primarily ranges 5% typically. So will that be applicable here also, or is it only the or any exit charges which will be there as and when it happens?
No, so there is a carry fee if you have joined later. So there is a carry fee of 10%, which is beyond the hurdle rate of 10%, which is, hurdle rate is 10% return compounded annually. Uh, so beyond that 10% hurdle rate, whatever is the return, we will charge a 10% carry on the remaining profit. I really didn't get your question. I mean, so that is the only, carry fee uh, that we charge at the time of exit. There's nothing in addition to that.
Okay. Okay.
Yeah.
Yeah, Prashantji, if you can run through this thing quickly.
So these are the assumptions, that there are, say, total capital commitment is 450 crores from 450 investors contributing 1 crore each. Out of 450 investors, 400 are class A, and rest 50 investors are holders of other classes, you can say. So what are these different classes? I'll quickly explain. So primarily, you can say there are, uh, 4 or 5 categories. So one is, an investor who's, um, investing, like most of the investors who will invest through the angel fund. The second category is, so that falls under the category of AX. The category SX is the sponsor investor, that is Agility, because we are the investment manager and the sponsor for the fund. So there is a class of units that gets allotted to us. And then there is, an anchor investor. If there is any anchor investor with Agility, so that anchor investor gets those units. Suppose, and this is again, the structure has been taken from other angel funds. So there are angel platforms which have syndicates like Let's Venture and AngelList. So they have an anchor fund, anchor investor, class of units. So we also kept it only for the purpose that, okay, if we want to do something like that later, we should have that capability. Otherwise, it does not have any other significance. And the anchor and the lead investor is the same. It is just that they have been mentioned separately. Then employees of the investment manager, so they get a class IX. The chapter partners and the lead mentors, the mentors associated with uh, Agility, so they are, given these classes. So why it is different is because for class SX and class IX and class PX and MX, there is no uh, there are no charges of 2%, though the carry fee might apply, but that 2% charge is not there. So for our employees, for our partners and our mentors who are associated with Agility, we have kind of waived off the 2%. And for the sponsor, because we are only the sponsor, we are not being charged any carry any one-time transaction fee. So only the class AX pays the 2% fee. So that is because there are different terms for different classes of investors. So these are different classes of investors that are defined. Okay. So now when we come to the distribution waterfall, so here 400 investors are in class A and 50 are in other classes. So let's go to the example. Yeah. So the 450, I can't see it here. So if we can stop at one, Neha, that would help. So 450. So total contribution received is 450. So here it is mentioning the upfront fee component, that is 1, because that is charged only from the 400 investors. So that is 1 crore, and 2% again from the 400. That is why it is 8 crores. So the 9 crores goes towards the expenses. Can we go downwards? So let's go further. Because we are charging this fees over and above, that is why the entire 450 crores is available for the investment. So the total investment in scheme A, I mean, just an example. say is 1 crore. So 1 crore invested in one startup. The hurdle rate as per the scheme document is 10%. That is as per our PPM. That the total expenses for the scheme is 1 lakh, and the total scheme fee is received 1 lakh rupee. So the components A, B, and C are defined as 80%, 10%, and 10% respectively. Scheme only has lead investors and does not have any anchor investor. So these are all assumptions for this particular scheme. So capital contribution is 1 crore. Scheme fee received and expenses are equal, so they get knocked off. Can we go forward? So now net proceeds are, say, that is available are 2 crores. Now distribution will be as under. So out of the 2 crores, 1 crore first will be given to the capital contribution, and then balance distributable amount remains is 1 crore. Can we go to the next? So now how this 1 crore gets distributed is this 1 crore, out of this 1 crore, 10 lakh rupees is given as the hurdle rate of return to all unit holders. So that goes to them. The remaining balance is 90 lakhs. And out of that 90 lakhs, go ahead. So first of all, the all unit holders, they get, I would say, so that, can we go upwards? I'm sorry, I missed on the component B and C. It was defined upwards. Yeah. So the sponsor is getting, say, a carry of 10%, and the lead investor is also getting a carry of 10% in this case. So out of the 90 lakhs, this example is for 20% carry actually. Can you go upwards? Now, out of this 90 lakhs, 10% goes to the sponsor investor, that is us, and 10% carry goes to the lead investor. That is, so 99 lakhs is given to the lead investor and the sponsor, and the remaining 72 lakhs is distributed amongst all the unit holders. So this is how, this is the example of that clause ABC, component ABC. This is just an example. In our case, if there is any lead investor who will be like, as I mentioned, like Let's Venture, or we have any lead investor who's there for all the deals, then this will come in. Or otherwise, it will be out of the 90 lakhs, we'll keep 9 lakhs as our carry fee, and remaining 81 lakhs will be given to all the unit holders. I hope it is clarifying.
Yeah, maybe I'll just take it offline with Prachi, and maybe I'll just want to look at a simplified waterfall, because thoda wo screen scrolling mein na cheezein, I missed out the context of few things here and there.
Okay.
I'm trying to take note so that I understand it. I get it कि 100% जो first 100% जो A block है, that is the capital contribution जो हर एक ने दिया है, वो तो आप first 100% पहले वो return कर दोगे, ठीक है? Then the second thing would be your hurdle rate, and then जो lead investor हैं उनका component.
So I'll tell you.
So I'll do the maths once.
No. So you're almost there, and let's clarify it for benefit of others also. So as I said, hurdle rate of 10% is given. So you get 10 lakh rupees as your hurdle rate of return. Remaining 90 lakhs is distributed amongst the unit holders and the sponsor. And if there is a lead investor and he is, getting a carry for the, on the deal, that is where, he gets an amount. So in this example, 10% carry is given to the sponsor, 10% carry is given to the lead investor. So out of the 90 lakhs, 9 lakh rupees goes to the sponsor, 9 lakh rupees goes to the lead investor, and the remaining 72 lakhs is distributed amongst all the unit holders against their investment.
All the investors, okay.
Yes.
Okay.
So in case if there is no lead investor, then we charge 10%, that is 9 lakh rupees, and the remaining 81 lakhs goes to the investors. Because out of the 90 lakhs remaining.
तो ये basically अच्छा lead investor was merged with आप sponsor वाला उसमें charge में club कर लोगे इसको.
नहीं. So component B is lead investor or anchor investor.
हाँ, so if there is no lead investor, so that means कि जो carry में आपने जो 10% है, over and above आप 9% और charge कर लोगे. Is that what you're saying?
No.
नहीं.
I am saying अगर इस एग्जाम्पल में कैरी 20% है,
अच्छा, ठीक है.
10%
अगर carry
to the lead,
20% है, ठीक है.
हाँ, अगर कैरी हम 20% डिफाइन करते तो हम 18 लाख रखते. हमारा 10% ही कैरी है तो वी विल कीप 9 lakhs ओनली.
ठीक है, ठीक है, ठीक है. Thanks a lot. ये थोड़े से questions थे मेरे. Thank you.
No. Yeah.
Prashant, so
Anybody?
moving on to certain questions from the chat box. So
Yeah,
we
please.
have certain favorite questions coming up. Girish is asking consequences if a person does not invest 25 lakhs as mandated by SEBI over a period of 5 years.
Okay. So, so there is definitely this is a requirement of SEBI that 25 lakhs has to be committed. So in case if any investor does not fulfill this condition, obviously it is because you can always say that you didn't like any of the deal that we presented after maybe the first investment that you made. Now, nobody is coming and questioning the investors. And in the past, for the funds that are there for a longer period of time, uh, SEBI has come back to the fund managers only and asked them that what have they done to ensure that these investors invest that 25 lakh rupees. So, I mean, certainly we'll have to send you out a communication that you have committed 25 lakhs and you're not, and if you respond that you're not like the deals, then nobody can force you to invest. So it is something that will come to us and we'll have to manage it, and that we will do. That is what we can tell our investors that, and that is what other funds are also doing. So if you sign up and you don't invest, then obviously, though we have powers under the PPM, because it is at the discretion of the fund manager to take any action against those investors who are not doing it, but we don't intend to do anything of that sort for our investors. Yes, Abhishek ji, if you have a question.
Yes, sir. So,
Yes.
sir, lead investor क्या होता है, कौन होता है, और मतलब what's his role? How you will decide कि lead investor होना चाहिए कि नहीं होना चाहिए?
सर ये मैंने पहले भी बोला था दैट ये जो हमने मॉडल कॉपी किया है और हमारे एडवाइजर्स ने दिया है हमें, दैट इज बेस्ड ऑन लेट्स वेंचर एंड एंजल लिस्ट. वहां पे इफ यू सी देयर आर सिंडिकेट्स दैट आर बीइंग रन, and the syndicate, the leader of the syndicate, so there is a group, suppose Dhyanuji has a syndicate on Let's Venture and he has 1000 followers. If Dhyanuji posts a deal there and suppose the carry is 20%, then that carry will be divided between Dhyanuji and Let's Venture. That will be the arrangement between Dhyanuji and Let's Venture, that they can share the carry. Are you getting my mind?
Yes,
So,
sir.
so we have kept this to, have that flexibility that tomorrow, if we want to do that as as a syndicate, if we want to do that, then that flexibility remains with us. There is nothing more to this. So, I mean, this example also that we took, it is based on that situation where there can be a lead investor, and the carry is being shared by the sponsor investment manager and the lead investor. That is the only case.
Sir, for example, let's say अगर एक startup को 1 million raise करना है fund, okay,
Yes, sir.
and 2 to 3 AIFs like Agility हो गया, Mumbai Network हो गया, या फिर और भी groups हो गए, they are coming together to complete the round, and कोई एक major network है जो कि सबसे बड़ा amount डाल रहा है, so that is what we call as lead investor as well?
No, sir, it is not.
No.
So that is
हमारे
no,
ग्रुप
no.
में से कोई होगा तो ही कहलाएगा ना?
यस सर, तो हमारे ग्रुप
Okay,
में से
okay.
अगर कोई होगा जो लीड कर रहा है,
Okay.
but then again, it is not deal to deal. This is a class of investor. So a class of a person who's leading a deal cannot be, a lead investor for all the deals. तो उसका क्लास लीड इन्वेस्टर नहीं हो सकता है. सो अगेन मतलब ये हमने सिर्फ रखा है फॉर flexibility that if we want to have a syndicate model in future, we will use this clause, nothing else. There is no other purpose of this particular, you know.
So network में हम जब काम कर रहे थे the agility, so who was putting the maximum amount on the table, he was considered as a lead investor. तो क्या वो भी condition यहाँ पे apply होगी?
नहीं नहीं सर, यहाँ पे वो कंडीशन नहीं है.
Okay. Thank you.
Coming to sir, more questions from the chat box. Could you shed some light on some of the previous exits that have happened through agility?
So previous exits that have happened through agility. So we have got 3 exits out of the first 2 companies where agility invested. So one was Power Gummies and the other was Vanity Wagon. We have got 2 exits in Power Gummies, very small amounts, but at a very impressive IRR. And same as with Vanity Wagon, there is one exit which our investors have got. Few have taken a partial exit, uh, and few have taken a complete exit because that was a direct cap table deal. So few of the investors have, I mean, say if they are holding 64 shares, they have sold 14 shares, but couple of investors have completely sold their shares. The IRR that they got in both the cases was way beyond 100%. So because we kind of got the exit within 9 months of our investing. We got those exits.
Right. Moving on to the next question. When should people ideally sign the contribution agreement? Now or at the time of their first investments?
See, ideally, it should be now, because up to March we are not charging any onboarding fee. So it is because what we intend to do is that people who are already on the network, we don't put any burden on them, and they can sign up the contribution agreement without any cost. If you intend to invest through agility, then we would recommend that you sign up the contribution agreement up to 31st March 2022. So we have already initiated the process, so we request that everyone complete that process ASAP.
Yeah. So
Dinesh,
hi
sir.
Prashant. This is
Yes, sir.
yeah. This is Vishal. Hi Prashant.
Yeah, hi Vishal. Yeah.
Prashant, one question here regarding this call for money.
Yes.
So as many of us, of course, we are investing from various channels, of course, into startups, right? So agility gonna become, at least in if I talk about my case, will become one of them, right? Now,
Yeah.
generally, whether we are going directly on the cap table, right? But to be very honest, going through a fund probably for me will be the first experience, right? So
Okay.
wherever we have invested, I mean, me alone or couple of other investors together, so we actually went on to the cap table directly, right? And of course, those deals, as you also rightly mentioned, that you will be sharing, one deal in a week, right? So similarly, so we look into the different deals also, and when we go to the cap table directly with the founder, so generally we get 1 to 1.5 months of time for transferring the fund, because in between all those documentations needs to be done in terms of due diligence, final report, SHA signed off. So once we do that SHA sign off, then only they give another 15 days of time to transfer the fund. And considering that fact, if we are coming through this fund now, and if let's say in the very beginning where we just had a one round of discussion with the founder, and then we of course gave a soft commitment of investing, then of course I think in another day or so agility already shared those documents as well. So submitting those documents is not a issue at all, right? The only thing is, when we invest in startups, we are angel investors, right? So we have limited amount of funds, but we plan it, right? So okay, we'll get this much fund in another 30 days or 45 days, and we're going to do that. That's the reason where how we commit as a soft commitment, right? And then we also understand the way you explained the other day, that your part is also correct, where you are showing one deal in a week, and then after 4 weeks the investor who said yes to one deal, and now he's saying that I will not invest in that deal, I would like to invest in this deal, and then you'll have a challenge. So what if, let's say, I mean, there should be another workaround for that as well. That if let's say somebody is committing a for any startup in 1 week, week one, and then let's say till week four, till that time, of course, the fund is not transferred, right? And then in between, you're also coming up with the deals, and the same investor also would like to invest, correct? Now, in that case, there can be a clause that, okay, I mean, we cannot take you into this deal because the previous deal fund is still awaited. Either you remit that fund, and then of course we can go with this particular deal. Reason being, investing in 3 4 deals in a month, and then shedding out money in the same month, it's just quite difficult. That's what I wanted to put it here. I don't know
Sir,
how
I
it will take time.
understand. No, I understand your concern, sir, but as I had explained earlier that we should not be actually, so you have to understand. One is the practical aspect, that because now in case of battery, there are 140 people who are investing, and we are calling up everybody to transfer the money. The kind of effort that goes in terms of collecting the money, believe me, if we give that kind of time to people, then we will wait for 2 months for people to pay up, and they then we will be able to collect that money, and that is what our experience has been. So after completing the process of due diligence and paperwork and everything, if we call for money, then it takes another couple of months for us to collect that money, and then there are a lot of dropouts, and we have already signed the documents with the investee company, that you have I mean, I understand, and I again appreciate that for anybody to arrange funds at a short notice, but I believe it is a matter of developing that habit, and because in any case the funds have to be arranged. So nobody's keeping a lot of money in their bank accounts because it is not very efficient. But that is why SEBI also, as per the rule, gives a 15 days time period after the drawdown notice. The only thing, as you mentioned, that based on one interaction, if suppose you say that, okay, we will not, uh, you don't want to commit, you want a deep dive call, or maybe one more call with the founder. That is what happened with battery also. So we will, uh, you know, uh, I mean, issue the drawdown only after investors are completely comfortable with the deal. Now, in case of battery, or in case of the first deal that we are doing, if you see, getting 140 contribution agreement signed, and then issuing the drawdown notices accordingly will also take a lot of time. I mean, you will be surprised. We have, sent out emails to more than 250 people, and only six have responded till now with their documents. And it has been, few days of us sending out that emails. So it will take a lot of time for us to, at least at this time. But as we go forward, yes, it will be, you know, maybe in a couple of days, or 3 days, or 4 days time, if there is a subsequent deep dive call also, we will be issuing the drawdown notice. You're correct. I mean, but the other side, as you rightly mentioned, that we present one deal a week. If we keep waiting for people to contribute to those deals, there will always be this challenge of people dropping out of the earlier ones and investing in these ones. Not that they, the company that is presenting today might be far better than the earlier one. The only thing is that with time, we tend to forget what we had thought about that company. So I mean, you might be very sure of putting in company X, but when company Y shows up, which is more of a recent experience, then so my intention is not to, grab the investment as it is available. It is not that, but it is a practical aspect. I mean, for us to operate effectively, we need to have this system. Otherwise, we will not be able to do justice. And ultimately, what is our intention? Our intention is that, whatever good startup we get, we should be able to do that deal. And believe me, the founders today have got so many options of, the good ones, that if suppose if we have committed, say, a 1 crore amount, and we are not able to meet that, the founders are forcing us to put conditions in the term sheet that if we go less than 1 crore, they have an option of dropping out. I mean, fine. I mean, if we don't invest, but this is the real world scenario. So we need to find ways where we can actually expedite the whole thing and quickly convert deals and move ahead rather than slowing it down. That is my request to everyone, that one has to manage their finances accordingly and help us do things more effectively. That is what I can say.
No, I agree with Prashant. This is Gaurav here. I think the practice we have seen recently, Vishal, that you spoke about of founders getting individuals on the cap table, that is moving away, because any large investor doesn't want to have more than three or four investors in the cap table when they want to invest. Therefore, the it's not the trend; it is the requirement of the structure to have as less investors as possible to get the large investors. Therefore, as investors or angel investors, we need to understand that how a fund works, and what is the fund's commitment on, because the commitment is based on our commitment. So today, if I commit, I'll pay 10 lakh rupees to agility. And if I don't pay the 10 lakh rupees, the other investors are suffering because the deal will drop out. So therefore, if we look at the whole chain, and it's for our interest not to slow this, because let's say if I want to make 50 investments, and if I force agility to give us only 5 or 6 investments in a year, then I'm losing out on 45 investments I can make. So I think the right way is investor. If my working capital is not clear and I don't have it, then I should push investment or cut my size of investment rather than
No,
investing
no,
everything in
Gagan,
one startup.
no, Gagan, that is not the case here. The point here
Yeah.
is what I was, just requesting Prashant here is that, okay, one thing is soft commitment. Another thing is the documents are already there in our mailbox, right?
Right.
Now, if somebody is feeling that, then at least, the person request here is that, some, amount of time to arrange those funds also, because anyhow, these forms are signed, it's committed, right? But KYC is done. The commitment is
No,
not only
Vishal,
now on the form, it is
but
on the documents.
the drawdown requirement in SEBI laws and in the commitment letter that he is giving to the founder is 15 days. The founder will not
Mhm.
wait. He will say, boss, you have committed 15 days. Why should I allow it? Because आपको भी पता है कि 15 दिन में तो कभी-कभी cap table ही change हो जाता है. If a large investor wants to, I have seen multiple cases, especially tech startups, or you talk about agri startup these days. 2 हफ्ते बाद का deal और today का deal का price में बहुत difference होता है. And therefore, founder would want you to drop out. He is looking for excuse sometimes to drop you out. So the question is whether we all investors suffer because of one guy not able to meet his working capital timeline. Therefore, I think the answer is if we have money, we commit. If we don't have money, don't have working capital, don't commit. I mean, wait for other startups to come up. So why to let agility suffer because of that? Because I think it's in interest of all of us that agility works faster and get us more opportunities. And if we don't have funds as an investor, individual, we should stay out and wait on the
No,
sidelines.
definitely,
Yeah,
Gagan. Actually, I got your point. So that's
yeah,
why I just mentioned in the beginning also that this is the first experience. So when
sure,
we
sure.
say, looking into our fund, so we very much, do that, considering the kind of investments we were doing directly on the cap tables. Now they
Right.
used to have a different kind of arrangements, but I think this is what it is. So thanks
That's
for
right.
clarifying that.
That's right.
Thank you.
Yeah.
Okay. Thanks. Thanks.
Thanks.
My apologies, gentlemen. There are a lot of questions on the chat box. We
Yeah,
really
yeah.
have to take this before we run out of time. So
Sure.
this one is from Rudra Agrawal. He's asking, page 10, section 2.2.2, drawdown notice clause, contribution agreement. Can this be explained a little bit more in detail?
Neha, can you pull this up?
In a minute, please.
Sure. Till then, I'll move on to the next question. This one is if the investor does not want to show the net worth of 2 crores but can invest more than 25 lakhs in 5 years, then what are the consequences?
Sorry, I didn't get it. Can you repeat this? Just a second.
Yeah. So I think, sir, in that case, the template that we've shared mentions that we have a minimum net worth of 2 crores, but you don't have to specify an exact number. I think that should help. But other than
Okay.
that, net worth certificate is a SEBI requirement, and we do need to comply with
Sure.
that.
Yeah.
Moving back to clause 2.2.2, drawdown notice clause.
2.2.2.
Yeah.
Yeah. So this is that the investment manager shall give the investor a drawdown notice in accordance with this agreement at least 15 days in advance of the date on which any capital contribution is required to be made by the investor. So that means the minimum time that can be given in a drawdown notice can be 15 days or more. It cannot be less than 15 days. That is what this clause means.
All right,
Yeah, I think it's understood. I think in the previous question, this was answered in a lot of detail. So not a worry. Thank you.
all right. Avinash, sir, please go ahead.
I think Janesh ji also has a question. Yeah. Avinash, sir, go ahead.
Yeah, hi.
Hi, sir. How are you?
I'm good, sir. How are you doing?
Good, sir. Good. Tell me.
So actually, I posted that question that when we're asking for a net worth of 2 crores, like in my case, I'm not a Indian. So for me, I'm outside Indian. So will the SABI will be applicable for me because I don't want to show my worth and I want to still invest maybe 25, 50, whatever money. So the question was posted by me. So is that still important that we should be showing our net worth?
Yes, sir. I mean, so you don't have to share your exact net worth with us. The declaration or the certificate can say that your net worth is more than 2 crores INR, excluding your principal place of residence. So, I mean, even if it is 200 crores, we don't want to know, and neither does SEBI want to know. It is just that the net worth has to be above 2 crores INR. That is what the requirement is. And the regulations have not distinguish between a resident and a non-resident.
Okay.
And the net worth certificate or a self-declaration is not upfront submitted to SEBI. I mean, because many people have asked that question. But yes, when they come for audit, then definitely we need to have those documents in place. Yeah.
Sure. Thank you.
So I
Moving
think
on to the
Mr. Janesh has a question.
Yeah, hi. I have a couple of questions going back to basics. If you can touch upon what is your investment philosophy, what are your criteria for selecting the startups?
Okay, sir, definitely. So I'll quickly mention it because this masterclass is on the angel fund, so more to do with the angel fund, but definitely our thesis also is important. So our investment thesis is primarily that we look for companies which are which have some traction, some revenue, early stage startups. So idea stage companies we don't bring to the platform for investment. So no pre-seed investments. It's all seed to pre-series A, and uh, then we don't prefer single founder companies, though we have invested in single founder companies, but we don't prefer. So we look for a strong team where there are more than one founder, and so just to mitigate the risk, we prefer to do mid rounds. That is, there if there is any investor, whether uh, you know uh, any investor who would have put money at a very early stage, but now this is a second round of raising funds. So we would want to do a mid round between two rounds. We would prefer to look at those deals. Lastly, we look at deals where we are co-investing with other platforms, other funds. uh, so suppose if any startup is raising 1 million, we would want to take a bite of 200K or 100K, depending on our assessment and what is available from the startup. We would not want to take the entire 1 million. So that is what we have been following. So till now, I hope I answered.
A follow-up, what kind of deals you have looked at in the past and what kind of deals you want to target? What kind of sectors? Is there any preference towards any sector, or you're sector agnostic? Or if you can
we
touch
are
upon.
sector agnostic. We are sector agnostic, and we have realized that that investors would invest in any sector provided the company is good. Definitely, individual investors would have their own preferences, but given the number of investors that are there on the Agility platform, now any deal which comes through and which is a good deal, attracts attention of the investors and the interest of the investors. That is what our experience is.
Finally, in terms of exit strategy, what sort of exit targets you have in your mind in terms of duration, in terms of IRR or multiples?
So, we always say that startups are a high risk, high return, asset class. Uh, and the second part is definitely the liquidity aspect of it. So, uh, you know, so in terms of the targets, there are no set targets, but as per what is the norm, what is the experience of investors who have been investing earlier, and even Agility for that matter would be same. So the period of holding would be anywhere between 2, 3, 4 years, five up to 5 years maybe. And the kind of IRR that we want to generate should be much higher than what you experience in other asset classes. Again, I don't want to give a number, but if we look at the two exits that we have got, the IRR was more than 100% in less than 9 months time. So, not that every deal might be, generating a very high IRR, but overall portfolio, it should be good enough. So you can say at least more than, IRR of more than 22, 23%, or to be on the safer side. But we have investors who have generated IRRs by investing in startups to the tune of, 50, 55% also. But then there are cases which who have earned much lesser, as individual investors in their own portfolios. So this is all subject to, because it is an angel platform. So what choice you make will decide your IRR. That is what I can say.
Fair enough, fair enough. Would it be possible for you to arrange to share with me a PPT which shares your previous deals and also the current investments?
Certainly. So Pallavi, if you can note down sir's details, you can share. Yeah, this is Pallavi's number. If you can just drop a message to her, and she'll share the
Sure, sure.
PPT. Yeah.
Okay, thanks. All the best.
Thank you. Thank you. Thank
All
you.
right. Moving on to the last question for the day. Girish is asking, since when do you plan to discontinue the network and make all of your investments through the angel network, through the angel fund?
So this is something that Gaurav helped me answer. So thank you, Gaurav, for explaining it very nicely. That these days the founders don't want many investors on their cap table. So if we are, uh, you know, uh, getting a deal to invest through the fund, unless and until there is a large check size which the founder agrees to take directly on the cap table, there will be no investment, on the cap table or through any other way, as a network, you can say. So with the battery deal, we have already initiated the investments to the angel fund. And going forward, all deals will be through the angel fund only. And as I said, if there is a large check, uh, like in case of battery, the amount of 75 lakhs and above will be directly on the cap table, as again the founder decided. So this is what it is, sir.
I think with that, we've exhausted all of the questions, unless I'm missing any.
Prashant, one question from my end, if
Yeah,
you allow.
please go ahead.
Okay, just want to know how much total ticket size is
I lost your voice, sir.
with the agility for.
I'm sorry, I couldn't hear you. If it was a lag at my end, I don't know. Can you repeat it, please?
Yeah, so okay, no problem, sure. So my question was, Prashant, so is there any ticket increase for agility angel fund for battery from initial 3 CR?
Yeah, certainly.
I think that was oversubscribed, right?
Yes. So we have spoken to the founder. So we have interest beyond 6 crores actually. Uh, so we have spoken to the founder. So we can accommodate, I think, all the investors in this deal. So I think that will be managed.
Okay, thank you.
Yeah. So certainly, sir, for the fund or otherwise also, we can have a board observer. So we again, depending on what bite size we are getting, whether we are the lead investor or not, we certainly have certain rights, which we reserve for with any deal, uh, and the board observer is one of them. So certainly that is there, in our terms, when we sign up with any company.
Sure, Prashant. I'm so sorry. One more question, and that
Yeah.
definitely going to be last one. So I remember in the last call you mentioned regarding, if somebody wants to take an exit, right,
Mhm.
from this fund, right?
Yeah. Yeah.
So agility will not be able to facilitate that deal, right? But my question is, let's say there are 100 investors who are actually onboarding for this deal. Now, let's say one or two people they say or they are interested to sell their share or their unit, right? So, will you able to at least connect with these 100 investors?
So that
Because
is what I had mentioned, that we will not find a buyer for you. I mean, we cannot guarantee, so I mean, if there is anybody who's looking for those units and you come up and you say, then it is something very different. But if you say that no, I am obliged to find a buyer for you, I that is what I have just requested, that we will not be taking any obligation to find a buyer. I mean, if it is possible, we'll certainly help you. But we cannot guarantee an exit whenever you want, because if suppose out of this 140 people, 70 want to take an exit at one time, where will I go? I mean, unless and until the remaining 70 want to buy their share. So I mean, I cannot actually give that kind of nobody can give unless and
no, no,
until.
absolutely, no, absolutely, Prashant. So I'm not saying that if HDD can do that. It's just like at least you can able to connect these at least 140
Certainly,
investors.
certainly.
Yeah, that's the only thing.
Yeah, certainly. I mean, that is given, sir. See, ultimately, we want it a good experience for our investors to invest through Agility, because not only it is, the returns that you make on your investment, it is also your investment experience. We have been, repeating this, and again, I would say that we are also in the process of learning, and we are trying to improve our operations also, every passing day. And the focus is entirely on the experience of the investors to invest through Agility. I can only say that. So whatever it takes, to improve your experience, we will try to do that.
Sure. Thank you so much, Prashant. Thank you.
Yeah.
Great. There's one more question on the chat box. Are there any thoughts on the choice of auditor for the startup agility fund invests in?
Yeah. So again, this right, sometimes it is available to us. So then we would certainly, appoint the, auditor of our choice for the investee company. But again, if there is any lead investor and we are not the lead investors, then generally the lead investors have that right of appointing the auditor. So wherever we are leading it, we will certainly want, our auditors. So I mean, again, to put a big four in this case might not be that beneficial for even the investors or the investee company. But yes, if it has scaled up to a certain height, certain level, then certainly big four, I mean, we can think of even big fours, because now earlier big fours were not open to taking up startups in their clients, but now I believe that is also. Yes, sir. Big four may not work. And again, as I said, early stages. But suppose if we are participating in a company which has scaled up to a certain level, uh, and if they are willing, if we see that a big four can take up this assignment, we would in fact even prefer big four also. We ourselves, we are looking at taking services from big fours, from various advisory and regulatory services, regulatory advisory and taxation advisory services. Yeah. Yeah. So definitely, sir, firms of reasonable repute are good enough. So that is what the choice of firms is going to be. If big four, it is not possible, then obviously the next level comes in.
Lovely. I think with that, we've exhausted all of the questions. And before we conclude, I'd just like to remind everyone that we've asked for KYC. You will share the KYC when at your earliest convenience. We will compile the contribution agreement for you and then send it back to you for signatures, right? So you don't need to do anything. The contribution agreement that we've shared is for your reading and for you to ask us questions if you have doubts, but that's just for your reading. Once you've shared your KYC details with us, your banking details with us, we'll fill it on your behalf, complete it, and then share it with you.
Yeah.
Yes, I think with that, we finally conclude all of our masterclass today. Thank you so much for joining in,
And-
everyone.
Yeah, and we look forward to meeting you all tomorrow morning at 11:30 a.m. And the startup for the week is Spardha, which is in the music, domain, and it's a very interesting startup. You should definitely attend the call and look at it. So, looking forward to seeing you all.
Thank you, everyone, for joining in.
Bye.